Happy New Year. I'm James Nelson, partner of Massey Knackle Realty Services, and I'm here to bring you January 2013's Nelson Report podcast. First of all, don't let this plant deceive you. I'm not in the lush tropical jungles in Costa Rica. Rather, I'm on the new 9th floor office at 275 Madison Avenue, so please update your records. More importantly, let's talk about what happened in 2012. As expected, we had a huge surge in the amount of sales in the fourth quarter. The final numbers aren't in yet, but it looks like New York City will have more than 1,000 property sales in that quarter alone, worth over $10 billion. We were already seeing a pickup in activity in the third quarter, which also had a similar amount of sales transactions. In fact, the most back since 2007. As a result, the long-term owners who were looking to sell before capital gains went up. And in fact, they did this year. Just in a matter of a few days ago, they did announce that the capital gains rate would go from 15 to 20% at the federal level, plus the 3.8% healthcare surcharge, bringing it effectively to 23.8%. So as a result, again, we did see a large amount of sales with long-term owners anticipating this. The residential market did see a similar uptick. Brown Harris just reported that there was a 40% increase in the amount of sales for condos and co-ops over the fourth quarter of 2011. They also saw similar activity in luxury sales, where $10 million apartments and above had 44% more sales over the last year. Douglas Elliman also said that it was the busiest quarter that they had seen in recent memory. However, they did say that pricing remained relatively flat. The median price of a co-op only went up about 2%, while condo sales actually went down by 1%, although they did note that luxury sales went up by about 7%. So again, that is an encouraging sign for the market. So the question now is, what's going to happen in 2013 now that the capital gains rates have risen? How much of a slowdown are we going to see? I mean, we've seen in past cycles that when there's a peak year, that the following year or two there's a slowdown. We saw it in 1989, 2000, 2007, especially in 1990 when the tax law changed. And so again, we'll see the similar type effects. But how much of a slowdown really are we going to see? We're not expecting anything drastic like 40 or 50%. What you have to remember is in 2012, even with the huge pickup in sales for the third quarter and fourth quarter, there was only 2% total turnover of all inventory. That compares to 2007's 3%, which was 50% more. But I think what's interesting is 2005, 2006, which I think most people would say was more normalized levels, even then you were getting 2.75 to 3% turnover. So if we do see a drop off of say 15-20% to take it down to 1.6, 1.7% turnover, that's still well below the historical average of 2.6%. So I don't think we're going to see that much of a drop off. And more importantly, I think what might offset this is the number of 1031 tax-free exchanges. Could this be this year's saving grace? When I started in the business close to 15 years ago, 1031s were really reserved only for the most sophisticated investors. Today, it's a household name. First-time real estate investors are using 1031 exchanges. I think the important thing to remember is that most owners who are looking to exchange oftentimes are looking to get out of active management. They want something more passive, like a triple net leased property. Unfortunately, New York City doesn't offer a lot of these single-tenant triple net leased properties. So we could see some of the money leave New York City chasing higher yields elsewhere in the U.S. For example, if you were to buy a Walgreens in Wisconsin or Indiana, those cap rates will range anywhere from 6.25% to 6.75%, whereas if you bought a Walgreens in New York City, you're looking at a cap rate of about 4.75%. Why is that? Of course, the long-term appreciation, and I would certainly make the case that 25, 30 years from now, you're going to see that that land is going to be worth a lot more money. So again, I think that should offset the sales that we're going to the drop-off from the capital gains increase, and I think 2013 should be a healthy year. So I look forward to being in touch with you. Thanks again.